In this lesson, we'll be talking about lot sizing and leveraging in the market. It is very important for you guys to know the lot size you'll be using while placing a trade and the kind of leverage you'll be selecting while trying to create your brokerage firm account. So what is lot size? A lot is a unit measuring a transaction amount. When you place orders on your trading platform, orders are placed in sizes quoted in lots. A lot can be any number of shares. So this is how it works. While trying to place a trade on your MT4 or MT5, the lot size is showed in form of volume, and every volume has the capacity of units you are buying. So this is the breakdown of everything. For you to buy 0.01 volume, it is equivalent to buying 1000 units of that particular currency pair. And if you are buying 0.10, it is equivalent to buying 10,000 units of that particular pair. And same as if you are buying one standard lot volume, is equivalent to you buying 100,000 units. This 0.001 is not available on MT4, and I don't think it's available on any currency pair on MT5 also, except for maybe all those synthetic pairs, all those volatility index. I think you can get 0.01 lot size on that. So guys, for this particular one now, this volume that is showing here, which is 0.50, it is equivalent to you buying 50,000 units of GBP pair, because the symbol here is GBP USD, which is British pound to US dollar. So for you to use this kind of 0.50 volume, that means you are buying 50,000 units of GBP pairs. So the higher the lot size, the higher the profit you can make in the market. Likewise, the higher the lot size, if the trade is not going in your favor, the higher the loss you can also encounter in the market. So while selecting your lot size, ensure you do a proper calculation of everything, because for this 0.01, if there's a pip movement in your favor, you'll be making 10 cents. There's a pip, just one pip movement in your favor, you'll be making 10 cents. And if there's just one pip against you, you'll be losing 10 cents. For 0.10, if there's a pip movement in your favor, you'll be making $1. And if there's a pip movement against you, you'll be losing $1. On a standard lot, if there's a pip movement against you on one standard lot, you'll be losing $10. And if it comes in your favor, you'll be making $10. So the higher the volume, the higher the profit you can make in the market. So it is very important, even while placing trade with volume, for you to select a leverage that suits you. So what is leverage? Leverage involves borrowing a certain amount of the money needed to invest in something. Generally, leverage involves borrowing a certain amount to invest in a particular thing you want to invest in, but in case of Forex, money is usually borrowed from a broker. So that was why when we were creating a brokerage firm account in the previous video I made, I selected a lower leverage, because the higher your leverage, the higher the profit you can make. Same as if the trade is going against you, the higher the loss you can also encounter. So for you to calculate your leverage size, this is the formula. Leverage is just like a buying power. It is calculated as amount deposited times the leverage amount you are selecting in the market. That would show you the buying power, the buying capacity you'll be having in the market. So let's assume you are depositing $500 and you are selecting 100, that is 1 to 100 ratio, or 100 to 1 ratio, that is 100 leverage. You are selecting 100 leverage. What you are simply doing is that you are timesing this 100 by the capital you deposited, which will now be equivalent to your buying power of $50,000. So you calculate it, $500 times 100 leverage, which will be equivalent to $50,000 here. That is your buying power. So it's very important you select your leverage wisely. In the United States, the recommended leverage is around, I think, 1 to 30 or 1 to 50. So, but for me, I do use 1 to 100. That's the normal one I do use. And most proprietary firms do recommend 1 to 100 also. So it's very important you select your leverage wisely.